What's up, guys? So I quickly wanted to talk about a setup I just took in the Aussie. I entered at the red line with a stop at the green line and a target at the upper green line. As you can see, it's already moving. I entered this on my other MT4, so I'm just, you won't see the order here, but we'll just briefly explain why I took it. So first, let's go to the daily chart. And as you can see, price made a very important swing low. Let me illustrate it here. As you can see, once the swing low was made, price moved very aggressively to the upside. So this is a very important swing low to the markets. I always keep an eye on these swing points and watch the price action whenever the market gets back there to see if there's still some buying action there. And as you can see, a few days ago, the market broke the low of the swing low and rejected a few times. And then we got this very bullish candle on this day. And as you can see, it took out the lows of the previous 2 days. So of this day and of this day, it rejected and we got a very bullish price action. Let's zoom into the hourly to get a clearer picture. If you're familiar with Wyckoff's work and accumulation patterns, you know that this is an accumulation pattern. I will briefly explain it, but this is the selling climax. This is your automatic reaction. Second test. This is your spring. And after that, you always get the breakout to the upside. And as you can see, we have a very powerful change of character, which basically means a bigger retracement than any other retracement during the previous trend. So here we got a bit of a retracement, but this one is way more aggressive and way stronger. Then we got the spring, breaking the low of the range and rejecting very, very strongly. I have statistics on the performance of this setup. It's a 68% chance. Let me quickly put it in there. There is a 68% chance of hitting this green line before taking out my stop at the low green line. And as you can see, it pays around 1.2 R, so that's quite a decent edge on this setup, and that's why I took it. Maybe it works, maybe it won't, but the setup is edge, and as long as you take setups that have an edge, you will come out in the long run. So I briefly wanted to illustrate the setup, why I took it. So to recap, price broke a very important swing point on the daily chart and rejected it very firmly. Then it took out 2 lows from the 2 previous days and rejected. And then on the hourly time frame, we have a very clear accumulation pattern, a very clear change of character in the price action, and we have the statistics in our favor. So that's why I took the trade. So let's fast forward a few hours, and then you can see my target got hit pretty quickly. So this was a very nice trade, almost zero drawdown. And that's just an example of how powerful the concept of liquidity can be, how quickly your targets can get hit if there is an accumulation pattern and if there's some liquidity being taken and being used by a bigger player to enter a big order. So that's what I wanted to illustrate. I speak to you guys next time.